Bloomberg Audio Studios. Podcasts, radio, news.
This is the closing bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Katie Greifeld.
All right, guys, let's get to some individual gainers as we await some earnings to cross the Bloomberg terminal. I'm going to go to one that was the number one gainer in both the S&P 500, NASDAQ 100. We're talking about Axon. It's the maker of tasers and also public safety software. They reported an adjusted EPS for the fourth quarter that beat the average estimate. So this one up remains 17.5%. We got to go to Salesforce.
Salesforce earnings crossing the wire. I'm going to start off with the forecast for the current quarter, the fiscal first quarter. The company sees revenue of about $11 billion to $11.1 billion. The low end of that range, higher than the average of street estimates of about $10.99 billion. For the current quarter, or the quarter that just passed, the company reported $11.2 billion, slightly above what the street was looking for. Adjusted EPS also came in above what the street was looking for at $3.81. The average of estimates was $3.05. And Caroline, the company also saying that it plans to increase its share buyback authorization to $50 billion.
And maybe, Tim, that is what the investor base wants to hear. If that's the proof point, look, believe in us. We're believing in our own stock. We think we're so beaten up, more than 40% in the last 12 months. We're going to be buying back to up to $50 billion. They're trying to perhaps tempt people to start to figure on catching a falling knife.
And also trying to get people to think of Salesforce increasingly as an agentic AI company. Mark Benioff, chair and CEO, saying, quote, "We've rebuilt Salesforce to become the operating system for the agentic enterprise, bringing humans and agents together on one trusted platform. And the more intelligence moves to where work happens, the more valuable Salesforce becomes." The question is, can it convince investors that it is a company for the AI era?
You know, having said that, it's a stock that, as we know, has been under pressure, down almost 30% here in 2026 already. The stock is down about 50% since late December, or I should say late in 2024, December of 2024. So it has been pulling back dramatically. And now you can see the stock in the aftermarket down about 2%. This is despite increasing its share buyback authorization to $50 billion. And again, going to that first quarter revenue, $11.03 to $11.08 billion. That is above the street estimate of $10.99 billion. Not enough, though, and to impress investors, at least in that early aftermarket trade.
This also gets to the idea, though, too, of just how important the conference calls are actually going to be here. And I do kind of wonder, I mean, it's kind of dueling conference calls because both Salesforce and NVIDIA start at the same time. Caroline, who are you going to listen to?
Hopefully we can spread across both. I'm going to be sitting next to you, Romaine. I'm going to be dialing into what Ed's listening to on NVIDIA and what we're all listening to on CRM. But what I think is interesting is Agentforce. This is where we're seeing agents being deployed by CRM and what we're seeing in terms of the upselling, what we're seeing in terms of adoption. They say their average revenue run rate has reached $800 million, up 169% year over year. They've closed 29,000 deals, up 50% Q on Q. Is that enough to show that their offerings in terms of agentic AI is enough to secure the amount of money and the amount of seats that they need people to still keep on paying for?
Well, Salesforce shares down about 3% in the after hours. Trade Desk shares down 10% in the after hours. Make that 12% at this point. This after the first quarter forecast missed estimates. First quarter revenue coming in at least at $678 million. The estimate was for $688.8 million. A first quarter adjusted EBITDA, this is the guidance, about $195 million. The estimate was for $222.7 million. Shares continuing to move lower, down about 12.6% in the after hours.
Yeah, and that's on top of already about a 34% decline in shares of Trade Desk here in 2026. I should point out about 10% of the float is short, so any kind of negative, maybe the shorts kind of have it right, but you're definitely seeing the stock down almost another 12% here in the aftermarket.
Yeah, and it gets to this idea, too. I mean, we talk about the idea of what these ad tech platforms are doing and the idea of a lot of the money flowing away from some of the more single players in that space and to, I guess, some of those bigger tech companies that, of course, have their own already baked into it. It'll be interesting. That's actually a conference call I'd be interested to be a fly on the wall on as well.
All right. People are pretty positive on all of these companies. When you're looking at the analyst recommendations, 22 say buy on trade desk, only 3 say sell. The price target is well above where they currently trade, at some $46. So where are they going to be able to convince the market that you can start adding to these names amid the disruption in AI angst, let's call it? All
right, we're talking a lot about technology. Let's go to a retailer. A little bit of lightness, perhaps. Urban Outfitters out with their results. Fourth quarter EPS, $1.05 a share. Fourth quarter adjusted EPS, that's coming in better what the street was expecting, $1.43 a share versus $1.26. And fourth quarter comp retail segment sales up about 5.5%. That's a beat too in terms of what the street was expecting, Romaine. And the stock's up about 1.5% here in the aftermarket.
Let's go back to tech. Snowflake shares higher in the after hours trade here. The company saying that first quarter product revenue, in its words, will be in a range of $1.26 to $1.27 billion. That's pretty much on the nose of what the street was expecting. That's coming on the heels of a fourth quarter revenue of about $1.28 billion, slightly higher than what the street was looking for. For the full year, the company says expect about $5.66 billion in revenue. The street was looking for 5.54. The company also says adjusted operating margin for the full year, 12.5%. So at least on the margins here, it looks like a relatively in-line quarter and a slight guide higher for the full year.
Let's check out Zoom Communications because, look, revenue beats both in its fiscal quarter reported and its full year guidance, but not so much if you're looking at the profitability. They're really seeing 2027 adjusted earnings per share coming in at $5.77 to $5.81. Now, the market wants to see $6.06. Zoom, though, did see that 2027 revenue will be in the range of 5.07 to 5.08. That was a beat compared to the expectations. And for their fourth quarter, we saw online revenue up 2.6% year on year. And you also saw a beat in terms of their revenue. But again, earnings per share falling short. This is a company that's having to invest in itself, trying to again convince people that stick with our product, stick with the conferencing, stick with the AI that we've already integrated. But they're probably having to spend a bit on that. We're seeing cash and cash equivalents falling some 6%.
Well, I'm looking at shares of Paramount Skydance down about 1.6%. We're getting some results from the company, not everything at this point. In terms of that outlook, Paramount Skydance sees fiscal year revenue at $30 billion. A look back, fourth quarter year over year, Paramount Plus revenue up 17%. Fourth quarter revenue coming in just above estimates at $8.15 billion. Fourth quarter loss per share from continued operations at 52 cents. Fourth quarter operating loss at $339 million. Estimate was for a profit of $309.3 million. Shares down about 1.6%. The real story with this company, though, is does it get those assets from Warner Brothers Discovery, or does Netflix win out? Shares down about 1.6%.
All right, let's go to the company behind WWE and so much more, those live events. We're talking about TKO out with their results. Fourth quarter total revenue coming in slightly above the street estimate at $1.04 billion. If you go to WWE adjusted EBITDA, that was better than the street was expecting, $165 million. UFC revenue, $401.4 million. Again, that was better than what the street was expected. And fourth quarter adjusted EBITDA coming in better than what the street was expecting. Right. But stock's still down about 2.3% here in the aftermarket.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.